Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the markets were a little bit stronger against a weaker US dollar overnight. Economic data have come through that worries about inflation drew with some comfort after a survey by the Institute of Supply Management and the S&P Global that reflects weakness in manufacturing activity in March. The Institute of Supply Management Purchasing Managers Index dropped by 46.3 in March from 47.7 the prior month. With that news, the market is now preparing for the next main event, being the US non-farm payrolls report, with the forecast around 240,000 jobs, with the previous around 311,000. If we do see a stronger number, that in terms could actually ignite the dollar, which fell overnight to around 101.60 after rebounding on Friday around 102.25. With the weaker play now in terms of the dollar index, the market may ease lower, with all eyes now looking to the RBA's rate announcement with an expected 25 basis point rate hike to 3.85%. From there, the market is expecting a potential rate cut by the end of the year, as the inflation still remains above the 2-3% target. The view is now that with the recent ripple in the banking sector, that the Fed may also start easing with one more hike expected in May, and then there's much talk of cuts towards the end of the year. So looking at the Australian dollar now, with the market waiting for the 2:30 announcement, we can see that the resistance at 67.35 was finally broken by the strong candle that was posted overnight, and from the break has given further scope to the upside. Maybe beyond 67.85.90, where we currently are at the moment, and up towards the 60-day moving average, which is seen somewhere around 68.30 to 40 area, and reassess from there. Any pullback should find support around 67.30. The euro, well, the market's back up to that top side level around 109. Still hasn't quite cleared the key level of 109.35.45. If we do see a break of that region, then I do anticipate stops will emerge and maybe even up towards that 110 area. One thing that I see as a takeaway point is that the RSI has maintained above the midway point after the last two sell-offs, and therefore seeing a little bit of divergence here is a bit of a concern now. So we may see a rejection from that top side and also see the dollar recovering if we do see a stronger non-farm payrolls number on Friday. The market was a little bit apprehensive in taking the challenge high for dollar yen, as it took the challenge closer towards that key level of 134.50.80. But the market is still holding to a relatively strong stance since the recent dragonfly doji posted, and along with that, with the indicator firmly holding, that I'm not backing away from that call of 134.50.80 as of yet. Dips are likely to be shallow, with support seen roughly around 132.50.70 area. There's a very strong move in the pound, and now close to its supply area that was seen back in January or even later in December. How strong is the bullish case? Well, for the candles, yes, but not for the indicators. The RSI is still somewhat lackluster, and a little bit of divergence there, as the market may actually get caught in a bull trap and therefore see a rejection from this area and look back towards the 122. So I'm not a bull here. And for those that are carrying long positions, I expect to see some profit taking, most probably, to emerge. The market was a little bit mixed and posted an engulfing candle overnight for gold after the downward challenge reaches around that 1,948, a little bit shy of its target. That was 1,935 to 36. Still, technicals are weak, so I feel the market, any move to 2,000 will struggle, and I'm still a little bit on the apprehensive side at these levels while the technicals are weak, especially with the MACD, and therefore could see a fall easily back to 1,935 to 6 and reassess. Well, as you can see, the market surged and gapped open on Monday after the recent announcement from the OPEC that cuts production may be seen further starting in May, somewhere around $1.6 to $2 million a barrel. That will be holding until December. Meanwhile, in other news, the Biden administration said the move announced by the OPEC was unwise. Like all gap prices, I often find they get filled. So with the cap around now seen at 82.40.90 and while intact, then this gap should be filled. So therefore, I do expect to see a pullback to around 75.40.80. Well, that's a wrap for the morning. Thank you very much for joining me. As always, look out for the intraday report and also the coming end of the day wrap.